So, hello and welcome back to the second week of Module 5, where we are talking about finances. This week, we are going to look at your cash flow statement. The cash flow statement is all about how much money is coming in and going out of your bank account during a particular time period. For example, a month or a year. The cash flow statement shows whether you have enough cash to cover your operating costs like salaries, raw material, debt repayments, or for whatever else you need cash to pay your bills. In this module, I am going to show you how you can forecast your cash flow for the next 12 months. Having your cash flow under control at all times is crucial. If you don't have it under control, you can run straight into bankruptcy. If more cash is coming in during a month that is going out, you will be fine. But in the other case, if more cash is going out than coming in, you can actually go bankrupt within a month. You might say, hang on, we've already looked at revenues and the costs in one of the modules from the previous week. That's true. But revenues and costs are not the same thing as cash. The profit and loss statement, where we will find the costs and revenues, is quite different to the actual cash flow statement. The profit and loss statement forecasts if your business can generate enough revenues to cover your costs over a certain time. So basically it answers the question on whether you can eventually make some profit or at least break even. In this way, the profit and loss statement has quite a long-term view, and you may look 1 year, 2 years, or even 5 or 10 years ahead with it. The cash flow statement, on the other hand, is much more short term. It forecasts your liquidity, or in other words, how much money you will have on your bank account at the end of the month. This is something you do at least monthly, and you look forward maybe 1 year, maybe 2 years, but more doesn't really make that much sense. But let's have a closer look at the differences between the cash flow statement and the profit and loss statement. In the profit and loss statement, you record the revenue in that month when you make the sale and write the bill. Now in the cash flow statement, on the other hand, you only record the cash coming in when you actually receive it on your bank account. Now, if you do cash sales only, for example, you sell compost and people give it straight away to you in cash, then the two statements will be identical and the cash coming in and the revenues coming in will be at the same month. But unfortunately, many customers only pay sometimes later. If you're lucky, they will pay 10 days later or 30 days later. If you're unlucky, they might take 2 months, 3 months, or sometimes even a year until they pay. Of course, the same goes for costs. In the profit and loss statement, you record the costs in the month when you actually incur them, even if you haven't paid any cash yet. In the cash flow statement, you record the costs that moment when they actually leave your bank account. Of course, here it's then you who can play around with that by either paying straight away or trying to pay as late as possible. A third difference relates to investments. In the profit and loss statement, you do not record investment costs. But what you do is you record the depreciation, which is an indirect figure. What you also do not do is recording the investments you get from externals. So, for example, from donors, impact investors, banks, or other financing partners. But in the cash flow statement, of course, you do record this because all the money that comes into your bank account or leaves your bank account has to be recorded in the cash flow statement. Let's have a look at the calculation of the cash flow statement now to make things a bit more clearer. Please go to the worksheet of week 1 and open the tab Cash Flow Statement. Again, there is a PDF as well as an Excel version for you to decide which one you want to use. We will go through the example of the composting plant again to explain you the calculation. First, you need to estimate the monthly sales forecast for the first year. Last week, we calculated that the composting plant sells 2,400 tons of compost in the first year of operation. If you divide that by 12 months, you end up with 200 tons of compost sales a month. This is a bit simpler than real life, but just not to overcomplicate things, we assume that you really just sell 200 tons. But for yourself in real life, you will need to calculate and estimate that much more precisely. Further, let's also assume that the composting plant sells 80% of their sales in cash and 20% on credit. As you calculate the monthly share of cash and credit sales, you will get this table here. Now, please head down to the line that indicates the cash at the beginning of the month. Since our business is just opening on January 1st, the balance is 0. On the cash in, please list all of the cash that is coming in during the first month. The cash coming in from sales is 8,800 for the composting plant. Since credit sales are payable within 30 days, the cash from the credit sales will only come in during the next month. That's why in January the credit sale is 0. Finally, cash transfer such as investments, bank loans, or any other cash being paid to your business account by financing partners, you can put in the line cash transfers. Let's skip those cash transfers for now and go directly to cash out. Again, for reasons of simplicity, let's assume that all of the operating costs listed here below are distributed evenly over 12 months. So by dividing your annual costs by 12, you will get the result for every position for every month. However, be aware, real life is much more complicated than that, and you will need to adjust your own real table to your actual reality when you have to pay bills. Let's go further down and let's have a look at the amortization of the bank loan. As calculated in the tab Investment Costs, the composting plant has to pay back 7,000 to the bank. This is what we call amortization of the loan. Further, we also need to pay an interest of 8% on the remaining loan. As calculated in the amortization schedule, the interest in the first year will be 5,600. However, the amortization as well as the interest are only due at the end of the year, so we record them only in December. Now we go to the investments. The total investments required to start the business are 436,000. However, since the operating capacity is only at 20% in the first year, the management of our composting plant has decided to only purchase one waste collection truck, one excavator, and one delivery truck for now. Like that, the total investment needed in the first year is a little bit less and stands at 396,000. If we sum this all up, the total cash outflow for the composting plant in the first month is 401,075. Now, let's go back up in the table to the cash transfers to see how these large investments into infrastructure and machinery can be covered. The composting plant has found 3 financing partners in total. If you go back to the tab Investment Costs, you can have a look at them. Under Startup Financing, you will see that the composting plant has secured a grant of 300,000 from the Central Environmental Authority, another grant of 66,000 from the Provincial Council, as well as a bank loan of 70,000. These 3 financing sources actually match the total investment required. Unfortunately, due to bureaucratic processes at the provincial level, the cash transfer from the Provincial Council is delayed by a few months and is only expected in August. As a consequence, the cash transfers for January only amounts to 370,000. This means that the composting plant would be short in cash by 22,275 at the end of the first month of operation. This lack in cash is a big problem until May, when the total cash flow becomes positive. This is super problematic because no bank would let you go over your limit this much. And if they would charge an interest that would be extremely high. So the composting plant has to find another source of funding to fill this initial financing gap of 53,550. To solve this problem, we will give you an overview of further financing options in the next module. But before that, go to week 3 to learn more about financial analysis.